Intel reported the largest quarterly loss in its history. And it is not just a short-term problem. The company has been losing money for 2 quarters in a row. So if you own shares of Intel, should you sell them? Or is the 33% drop in price in the last year an opportunity to buy? Let's find out by analyzing and valuing Intel. But first, let's take a look at those terrifying quarterly results. Revenue is down by 36% year over year. Net income is down by an incredible 134%. And the main reasons for that are lower revenue and, at the same time, substantially higher operating expenses. Cash and cash equivalents are down by 26% since December, and debt at the same time went up by 29.6%. And if these results were not scary enough, Intel's outlook for the next quarter is basically the same. Individual insiders, that is an X with 0.1% of the company owned by individual insiders. And we would like to see this number over 2% because then we know that the management has its skin in the game. Well, we're not quite there. And are individual insiders buying? That is a check. In the last year, we saw buy transactions from insiders worth over $4.8 million and sell transactions worth only $18,000. So insiders seem very optimistic about the current price and the future of Intel. And do super investors own this company? That is a check. We see 6 super investors owning shares of Intel. And are they buying right now? That is an X. In Q1 2023, we don't see any transactions. But in Q4 2022, they bought 47,000 shares and sold over 1.5 million shares. And what is worth noting is that David Einhorn and Lee Ainsley sold 100% of their shares. And just a quarter earlier, Seth Klarman did exactly the same. Return on invested capital. That is a check at 15.4% 10-year median returns. And we want to see this number higher than 10%, so that is a nice result. And free cash flow growth? That is an X. Unfortunately, Intel has a negative free cash flow. And in 2020, it was almost $21 billion. Now, it is around minus $9 billion. So that is bad. And what do we know about net profit margin? It is an X at minus 5.1%. So that is bad on its own, but when we compare it to some of Intel's competitors, then we see that AMD has a net profit margin of 5.6%. Nvidia is at 16.2%. And Taiwan Semiconductor Manufacturing Company is at an incredible 44.7%. So Intel's plans to use its factories as foundries to make microprocessors for other companies, just like TSMC is doing in Taiwan, seems a smart thing to do. Intel basically wants to compete for custom jobs like making chips for Apple. And the faster they will be able to do that, the better. And now let's take a look at share buyback. It is a check. In the last 10 years, they bought back 18.2% of their shares. That is a very nice result. And how is the debt looking? It is an X. It would take Intel 8.5 years to pay it back with a 5-year average free cash flow. Of course, the current free cash flow is negative, so we had to use 5-year average one. The dividend yield is 1.6%, so that is around 50 cents annually per every share. And the payout ratio? Well, it is an X because, as we know, there is no income, and paying around 50 cents without any income is not the smartest thing we could imagine. And what about dividend growth? That is an X. The dividend was growing for around 8 years, but they just cut it down significantly. It was 37 cents quarterly, and now it is just 13 cents quarterly. So that is a big cut, but maybe not big enough. We will use a 5-year average free cash flow for this calculation because the recent one is negative. And actually, the 2022 free cash flow was negative as well. So the trend is not very optimistic. We will have to estimate the growth of Intel for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 4% and then 6%. In the medium, 6% and then 8%. And in the high scenario, 8% for the first 5 years and then 10%. And when we look at the last 10 years, we see a growth of revenue by 1.7%. Earnings per share went down by 0.9%, but assets went up by 8%. So these estimates are all optimistic. Even the low one is very positive if we compare it to the last 10 years. So with such optimistic estimates, the intrinsic value in the low scenario is $11, in the medium $15, and in the high scenario $19. But we have to always add a margin of safety to those prices. I use a 30% one. And with such a margin, we get in the low scenario $8, in the medium $10, and in the high one $13 per share. And the current price is around $30. So it is all in the red and by some margin. Okay, so it is a cyclical business, and maybe this is just a nature of this industry. After all, we see similar problems, for example, with Micron. But at the same time, Taiwan Semiconductor Manufacturing Company is doing just fine. Samsung is doing okay. Even AMD is doing better than Intel. So I know it is a very challenging time for the entire semiconductor industry, but the scale of problems for Intel is a bit scary. So let me know what do you think about this company and its current problems, and if you want to see my analysis of Micron, then click here. Thanks for watching and see you in the next one.